recording. Let's go look at charts. Okay, so what was the agenda I put? Okay, so let's talk about trading, right? More than the platform, because a lot of people are losing money and they have no clue what the fuck they're doing, so we're gonna try to save them. Starting with the basics, I have like 6 things I have on the list here. The first one being rotation, right? So at any given moment in time, money is always rotating in and out of sectors, and usually, technically speaking, when XLP gets down to its lows, right, you find key levels on defensives, and when defensives get to a certain point, you kind of start looking at the market, and same as VIX spiking. So let me clean some stuff up here, and then let me enable this. Okay. There you go. So our sectors, right? Here on my screen. Wait, am I even sharing screen? I'm not sharing screen. What am I doing? That was embarrassing. Okay. Now I'm sharing screen. Cool. So the main sectors that we have here, I have it in my ETFs list, right? You have XLC, XLF, YP, VK, LRE, LE, LU, LI, and LB. So those are your main sectors. Generally speaking, when SPY is moving up, that is tech, semis, and banks moving up, right? So if I pull up XLK, this has been ripping right from the lows. XLK went up, what, 56%. SMH went up 79%. And XLF, funny enough, is it did jack shit. So usually financials do move with SPY, right? Like as we have seen in the past, right? Goes up, comes down to the market, goes up. This time we actually have a divergence where they did not move up with the market, and they actually have been just consolidating and doing nothing. So that's actually pretty interesting. Not sure how to interpret that at the moment. I would just keep in mind that financials have been coiling and look for a breakout above 53, I would say. Financials can start running higher, but it looks like money has just not been interested in anything bank related, and it's been, chasing the hype of AI. So when we talk about rotation, right, like how do you know when it's time to rotate? And how do you even tell that something is extremely overextended? So I have a little custom indicator here. You can see the candles kind of light up white. That to me is a caution symbol, right? So when we break out of a previous all-time high, this move is invalidated because this is your first momentum push higher. And then after that, you have basically like a power of 3 for how these sectors move. And what I mean by that is if I take my brush tool here, we went up, down, up, down, up, down, right? 1, 2, 3. So your third move, generally speaking, is your exhaustion move, right? And that's when you can start getting cautious. Also in the Trader Daddy thing, if you were to go to reversal finder, it's not going to show anything right now, but for SMH because it's already went down into neutral territory. But I guarantee you, as of this candle up here, we were probably pushing 7, 8, 9, so it was really flagging overbought territory, right? So you have your power of 3 move, pushed up, and now things are cooling off. Your defensive sectors, right, if we find those, which is usually, where's XLV? XLV is one of them. Yeah, so healthcare is a defensive, right? So that's been doing fuck all for the longest. And now that the market is starting to rotate, money is starting to rotate into healthcare. You can see that here. It's just been holding above this gap, and it looks like it's honestly pretty good to continue higher here. Right, it has multiple gaps to fill. If I draw my trend lines here, we have a gap here to fill. We have a gap up here to fill, right? So there's a good chance that healthcare keeps going up. The two healthcare stocks I personally like, and I own both of them. For those interested, one is HIMSS. So with HIMSS, we have this triangle formation. It's now tried to get out of it twice. Eventually, when it does break out, this is going to run. I've been selling cash secured puts and covered calls in this range, and I expect this to break out. The other one, which already did break out, and I also really like, and I'm waiting to see if I get lucky enough on a pullback, is Oscar. If we go back, you will see that right here, this orange line, this thing has been in consolidation for, what, this May 2024? So 2 years, right? Retested it so many times, failed here, broke down below, broke above. I didn't actually catch the move on this candle. I caught it like midway here, so not perfect, but this is now breaking out, and I'm going to be keeping Oscar. So XLV is one of the sectors which has defensives. It's a defensive rotation. One more thing we have in TDPro is if you actually go to market health and rotation, this thing starts flagging you when it's time to be bearish, and it also tells you something like in here, like if you actually want to learn about important ratios in the markets, you go to this key ratios tabs, and it shows you various well, I guess the word is ratios for sectors and what it actually means in terms of what's the healthy status and what's the warning status. So XLY versus XLP, the way that you would see this in trading views, you would literally type XLY divided by XLP. And I have this little cheat sheet. I will screenshot it in the chat for you guys. So you can look at that later. But basically, when you see a sharp fall off of this ratio, that usually means the market's getting defensive and bearish, which is not good. We saw this here. This was actually one of the early signs. So before the S&P fell off a cliff early in the year, January, February, this ratio was already showing signs of weakness throughout. And we actually ended up bottoming when it got to a massive point of support for the ratio, and then from there things have been chill, and now it's slowly starting to fall off a cliff again, right? You can see all of these bearish order blocks. There's no actual, I guess, volume here the way the ratio is computated. This is signaling that the move is quite extensive, so it is a rotation into defensives, right? So this is one way you can do it. You can read about all of this on the market health page, and it's just good long term for people to kind of understand which sectors move when, and that's how you can protect yourself in the long term. Another thing is obviously the one that I'm sure all of you are aware of is VIX spiking. For some reason today VIX is broken in TradingView. Like this is not the correct VIX. It's just stuck at 2143, and it's been like that for like 3 hours. So it's broken. I don't know what the actual VIX is today. But another way that you can protect yourself is through the VIX. So if I take my VIX chart here, you can see I have a bunch of blue lines. And the way that I use these blue lines is basically it's levels of caution and levels of fear. Right, so if I scroll back historically, you can see that these blue lines get touched a lot. Right, you can see here, it's like level after level after level for VIX. So I have this charting from a couple of days ago when we were talking. And one of the things I was mentioning is, okay, we have these three little bases forming, and then from there, one of two things is going to happen. We're either going to break lower, and the VIX is going to get to a pretty low point, right? You can see this blue line, generally speaking, after we hit it, oftentimes we start getting bumpy, choppy. If we blast straight through it, right, then the market is euphoric, and we go to the next blue line. So in this case, one of the ways that I was able to tell you guys that I think we're in a short top, aside from the fact that money was starting to rotate into other sectors and we were euphoric, is the VIX also got to this 15 level, and I was like, okay, there's a chance we bounce from here, and guess what? We did. All right, bounced back up to the 20, broke that. Next day bounced to this level right here, this 22.7, and now I'm actually expecting VIX to potentially go even higher to 25 and fill this gap. I have an alert here that you can see. When this happens is when I'm going to start scaling back into some of my positions in the market. And as the VIX gets higher and higher, right, so when there's times of peak fear, right, how do you find a bottom? The way you do that is you want to see one of these levels tapped, and then you get a massive rejection candle from it, right? So right here, right, you tap one of the levels, massive rejection, the fear is done. Right here, right, max fear, tap one of the key levels, fear is gone. If you go back historically, you get this pretty often. I mean, this was abnormal. What was May 25th? This was the whole tariff shit. I mean, this was crazy, but same concept. We went euphoric on fear, massive red candle, fear was done. Right here, went up, right, consolidated. Next day, massive red candle down, right, bearish engulfing, fear was done, and so on and so forth. Or you see a big rejection wick, right? So either a red candle or just a big wick from one of these key levels. Generally speaking, that's how you know the market is done being fearful, and you can start scaling into your positions using the VIX, right? So when VIX gets anywhere to 15 or lower, you can set an alert. This just means be defensive, right? Start scaling out, start taking profit. Anything in this range, that means the market's way too chill, life's way too good. Take your money, de-risk. Doesn't mean you can't still be long. That just means maybe add some hedges, maybe take off, 3x leverage, or plays that don't expire, that expire in a very short time, is down here. As far as the fear is concerned, right, like when is it time to start looking for bottoms? I'd say anything above 25 on the VIX, above here. Now I know it's a massive range, but usually fear, once you get above 25, you either start slowly rejecting or you just spike to the extremes. Let's move that up actually. Let's say 28.50. So this is from here, max fear zone, right? You come into here, the market's usually selling off. You're either spiking higher and then rejecting, or you come up here and you start rejecting, right? So anything in this range is like, okay, everyone's scared, I'm probably scared, but it's not a bad time to be buying. Anything down here is I should be defensive. Anything in the middle is just the market being normal. Nothing to really worry about. That's VIX. And feel free to ask questions if you have them. I think there's a chat that I'm supposed to be reading somewhere. Is there a chat? Open chat. Okay, no one typed anything. Cool. So aside from VIX, you also have something called the move index. So the move index is also a really good way. So it has to do with the bond market volatility. So the move index is how you want to try to find bottoms in the market. And I'm going to show you some correlation here. This was Thursday, the 26th of March. So TDPro didn't exist. For the people who know me outside of that, they know I basically called the bottom of this year. How did I do that? Aside from a rejection candle on Wix, which we'll take a look after, is the move index, right? So this is the bond market volatility. When there's real fear in the market, this moves up. As you can see right now, it's chilling. Why? Because there's no actual fear in the market. Where there's nothing that the market genuinely cares about currently, aside from it's taking some profits because you have an 80% move on semis and on AI, and people who are smart are taking their money and chilling, right? The market's not spiking. Over here, the market, the bonds market, got very, very fearful, right? This is between February and March of 2026. If we look at SPY, in February and March, we went from chop, 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 chop to pew, down, right? Down, 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 down. Now, the market started bottoming here around Monday, the 30th of March, right? It had one last hurrah down, scared a bunch of people, sold out a bunch of positions, and then the bottom formation started. The move index actually topped on the 26th, and then on the 31st, you had this bearish candle down where you broke structure, right? Right here's the structure. When this happened, this was your confirmed bottom. The 31st of March, 26. Let's take a look at SPY. 31st of March, 26. On this bullish candle, with this gap, while everyone was still fearful, that confirmed the bottom. And it's really that simple. We take a look at VIX. Let's see what VIX did on the 31st of March. Where's the 31st of March? There you go. Right here. Alright, looked like it was going higher. Bearish engulfing candle. Everything aligns nicely. You take a look at your ratios. What was the ratio? XLP divided by... No, I fucked it up. XLY divided by XLP. Damn it, what was the ratio I just gave you guys? Yeah, it was XLY divided by XLP. Okay, cool. Yeah, so this didn't have as much of a move, right? It still went through a little bit of consolidation, but then this started rising, right? So the ratio bottomed out. And then when we broke above here, this was a little later. This was by Friday the 10th. But this was another confirmation when this ratio is moving up. That just means fear is out of the market. So there's your three ways that you can kind of start understanding market tops, market bottoms, and when you should be de-risking. Oh, VIX is fixed. There you go. Now it's working. Yeah. So you can see this is definitely looking like it wants to go higher. 25 is my next level for that. Then another thing for bottoms, something that I find interesting, won't help in the current situation because we're so much above the moving 20. But you'll actually see the way that historic uptrends work is if you go on SPY in the weekly, we'll usually tap the weekly 20 at some point during the uptrend, right? So like over here, broke previous all-time highs, went higher, tapped the weekly 20, then we were consolidating. Historically, once you break the weekly 20 on SPY, it goes to the weekly 50 like 80+% of the time. So this is something for way further down, but like next time that we're breaking the weekly 20 and we're actually forming a top before a big drop like this, once the 20 breaks on the weekly, it usually goes to the 50. 20 breaks, goes to the 50. Right? Over here, tap the 20, went higher, tap the 20. We actually closed above the 20 the following week, even though it looked like a bearish week. Closed above the 20, tap the 20, tap the 20, tap the 20, closed above. As soon as we close below, down it goes. Right? So something else for you guys to consider for later in time. Any questions so far? Someone ask something smart. Or ask something in the chat at least. Tesla. What does that mean? You want me to look at Tesla? We can look at Tesla. Let's see. Tesla. I don't know. Tesla just doesn't look good. What are the levels for it? It's sitting at its put wall. I don't know. I don't like Tesla here. With Tesla, you want like a clean structure break. That's when it pops. Otherwise, you're in a chop zone. So, like here, right, we had downtrend. Popped, retested, went higher. Now there's clearly selling pressure on the wicks, right? You have a wick here, a wick here. We try to go higher this week. Wick here. Anything in this range is fair game. It's going to take some time for Tesla to come back and gain strength. Like unless there's a news pop, stocks never just randomly like bull candle. You have something similar to this where you might pop, then you go down, then you get another green candle, and then on your fourth week, right, it's a 4-week process. Green candle, first set of buyers takes profit, buyers step back in, tells you the zone they're defending, right here. Break the previous high. I use actually the candle bodies, not the wicks for that. Break this, up she goes. So now, you know buyers stepped in around 368, right? That's a potential support you have. Anything here is just absolutely pointless. Like, don't trade Tesla here. Wait for it to at least get back above 400, start showing strength, and then maybe it goes higher. I think a lot also depends on how the SpaceX IPO does. Have we covered PLTR? Also Poet. I can take some tickers later. Let me see if I wanted to talk about any other general items. I wanted to talk to you guys about stop losses. I think that's a big problem, is a lot of you don't have stop losses, and it works until it doesn't, and it's kind of a double-edged sword. So I'll give you Albizi as an example. He had no stop loss, and he was in Mu over here. He was, I think he had like 1 month or 3 weeks. And so he had no stop loss. At one point, I remember him saying he was down like 65%. So imagine, being down 65% of your portfolio and not selling. And then all of a sudden, Mu reversed, and the guy made 100K in a week, right? If he had a stop loss, he would probably have gotten stopped out realistically, let's say somewhere here, right? So he would probably have gotten stopped out, lost 40%, and then Mu went euphoric. So it saved him. I mean, sorry, here it screwed him. Over here, where we are now, he's fucked for not having a stop loss, right? Because unless Trump says something very, very bullish, he ain't getting Mu back to 1200 in a week from now, right? He's again down 60-70% of his portfolio, and had he have had a stop loss, which in this case he could have had a very tight stop loss, right? The moment that this gap down from all-time highs, you should have triggered your stop. You should have had a stop being where the bulls stepped in, right? If you have a conservative stop, you can see buyer step in, buyer step in, buyer step in, gap down, can't get above where the buyer stepped in, closed below, you're out. In this case, it would have saved him a shitload of money. And depending on which time frame you're using, you should always have a stop loss. The way you gauge that stop loss is without any technicals. You don't need a single indicator on your chart, right? We're going to pick some random stocks and we're going to look at stop losses for them. You just want to see where are the buyers, where are the sellers. So I'll give you an example for reversals, right? Over here, if you were shorting on this massive candle, right, you have a bearish engulfing candle, looks very bearish. Let's say you got in short here. Where should you put your stop loss? Where the sellers stepped in, up here. If this is to continue going lower and form a zigzag pattern, right, like this is exactly the level that it should reject. Here, we went above, buyers took control, sellers tried to push down, buyers kept control, news or something happened the next day, we gapped up, away it goes. If you didn't sell on this candle close where buyers showed strength, and you thought, oh, I'll get lucky, and then you felt very happy on this reversal candle, right? Because you're like, yes, we're going back down, and then the next day you just got fucked. That's why stop losses matter, right? You want to see where the sellers or the buyers are stepping in. So let's look at the current example here and just do some charting on Mu. Oh. You can see we have some sort of downtrend, something like this. Where are the buyers at? So far the buyers have been down here, 864. Right, we can clearly see that because we pushed down, gapped up the next day. Buyers don't necessarily just come from wicks, they come from gaps as well, right? Because you have the overnight market. So people stepped in here and bought. Came back down, people stepped in here and bought. Again, where are the sellers sitting? Right? Very clearly, somewhere around here. Why? Because we rejected it 3 times with wicks. You can see the wicks here. And then when we tried to get above, we got flushed back down, right? So you have a clear range here. Now let me remove this downtrend line. You can clearly see the range, right? Actually, let me put the downtrend line back. Now, if Mu is to take one direction or the other, it needs to logically break one of these sides, right? If we are to go higher, you might see it come here, reject again, push down, right? In this case, it'll be breaking the trend line, pushing back down, and then reversing up. If you see something like this, you can go full port your portfolio in Mu, and you'll probably make a lot of money, again, with a stop loss. But high probability that this goes back. Now to the downside, right? Maybe it goes down here, looks like it's breaking again, people get bearish, bounces to the trend line, then breaks. Because it's all a mental game. When you see key levels on the chart, it always makes you feel some type of emotion and some type of fear, but then they seem to always hold. So let me pull up a random ticker. I'm trying to think of what a good example would be. So let's say we do Oscar here on the bull side of things, right? Every time you come up to this trend line, and let's say you bought Oscar somewhere down here, you get very, very bullish, right? You think, damn, I'm going to be going here to all-time highs. I'm going to be greedy, right? We're going to break this line for sure. And every time, it rejects, right? This is where euphoria and fear come in. When people are euphoric, it rejects. What you should have been doing is taking profit here. Now on the flip side, let's say I draw a line down here. Right, it comes down here, and you're holding, let's say, somewhere in the 17s, comes down here, and you're thinking, damn, like it retested once, twice, 3 times, it's got to break for sure, right? And then you sell your positions, up it goes. Comes down here, looks like it's broken, you're in fear, sell your positions, up it goes. Here it finally breaks, but you get more examples, right? Comes back down, and every time, if this was a live trade, you'd be extremely fearful. Every time it just jumps back up. And it happens to all of us, right? It happened to me on Zeta. I'll give you an example from this year, this level right here. I sold right here. Fear got to me. I was like, I don't like this company. Things are looking bad. This was also when the entire sector of software was tanking. So I was like, damn, the sector is tanking. I don't know much about this company. I bought it because I saw someone else talk about it. I sold. Well, guess what? I was the idiot who didn't follow his own rules. Up it goes. Pew. Right? So if you're feeling extremely fearful, that usually means you should do absolutely nothing. And you're feeling extremely greedy, that probably means you should sell. Like, if nothing else, right? If you don't look at charts, at technicals, you don't know too much about the market, just go by your own emotions. Because when you're shitting bricks, wanting to sell, that probably means so are 80-90% of other retail traders, and that means don't sell. And when you think you're going to become a millionaire, so all-time highs, making so much money, that usually means you should do the exact opposite and sell your positions, right? Alright, any questions? And then I'll go and we can actually look at live tickers and I'll give you guys an analysis on those tickers. You can throw them in the chat or open mic. So Kyle says, yeah, I'll look at ACS. Kyle says, for stop losses, I find a lot of the time I set mine, get stopped out, and they rocket up right after. Yeah, so that's normal, and the tip that I give people for that is always use daily closes, because usually when you get wicked out like that, it's on a daily chart. And so it'll save you like 7 out of 10 times to wait for a daily close. And 3 out of 10 times you'll close lower than your stop loss and you take an additional loss. But I guarantee you it'll save you more times than it hurts you, just because I've seen it enough times. And so just do that. Like, if you want to exit a position always wait for a daily close unless you're, scalping intraday and you're doing like SPY 0 DTs, then obviously, don't do daily closes. All right, let's talk about PLTR. Look at PLTR, right? Our concept right here. The concept of fear. Look at this level that we're at right now. People are extremely fearful, right? 1, 2, 3. What if PLTR breaks and we just do 2, 2, 2, 2? Right? That's what's in people's minds right now, especially the people who own PLTR. They're extremely scared. I'm going to tell you, this is actually a really good time to buy. Same concept as we talked about. Because think about your risk to reward ratio, right? If it's truly gonna hold here, and you're gonna get kind of like an inverse head and shoulders, you're in validation. I wouldn't even go to the bottom of this wick. I would do like the halfway point of this wick. So halfway point would be, say, 125. Draw a line here, 125, somewhere here. Okay, something like that. All right, this is why stop losses are important. You enter this play. Tap this white line. Your stop here, right? You're going for a daily close below. Super tight stop. If you expect this to bounce, you would buy at least a month out. Take profit zone, right? Just going off of historic levels, somewhere here. You guys can see why I marked this level out. Makes sense. Say you're buying 1.52 month 0 DT. 6.99. That's a insane risk to reward ratio. What do you have to lose? That means if you're risking $100, the most you're gonna lose is 100 to gain 700, right? Why would you not take this play? And again, invalidation is daily close below. Let's say things go bad. Where's the damn drawing tool? We close the big red candle down here. Okay, you take your loss. But we're in war. We're going to continue being in war because of fucking Israel. And PLTR is a company Trump likes and supports. His son likes and supports, right? Do you really think this is going to just go back down? Always has good earnings, has partnerships. Anyways, I'm going to stop ranting about this, but you get the point. Beautiful play. Whenever there's max fear like this, take a tight stop and take the risk to reward ratio. Let's take a look at Poet. So originally, when I called out Poet and said it was a good play, we got this move up. After that, I hope most of you sold. Now we're back here, and I'm buying some Poet again. So they have like 5 lawsuits against them right now, and their CFO also lied about partnerships that didn't happen. So the company, from a legal standpoint, is in a really bad spot. Their reputation has been completely screwed, which makes it a more risky play. I think if the photonics sector comes back, this is going to come back regardless, and this is just like the cheapest play you can do. So I did buy actually at the midpoint of this box. So what's that, like 10.85? But I do expect that there is potential, especially if the legal cases against them are successful, that this company may go to shit. So where is my stop loss? I have it set down here. Around this level. Because this is where it has previously found buyers. So worst case scenario, if we get a flush, we come down to around 9.5. Now, because it is a weekly zone in this case, and I'm holding equity, I'm not holding um, calls or anything like that, I'll actually wait for a weekly close. So because it is not just a daily level, it's a weekly level, I'll actually wait for a weekly level close and then decide if I want to exit or not. So if we get a weekly close below, let's say we get a really big shitty red bearish candle and we close, I don't know, somewhere down here, then I'll exit my poet position. Otherwise, I'm gonna just accumulate and hope that they resolve everything and photonics does good, and then poet can go back up. That's poet. Let's see, we have ASTS. That's another one I'm in. Have this level here, these two boxes. This was from a previous mentorship call I did. Again, historic levels, blah blah blah. I was telling people, goes into this box, do nothing, goes above the box, that's good, needs to hold above the box. So 90 is a key level for ASTS here, and I think a lot of this again comes down to the SpaceX IPO tomorrow. Right now we are above 90. This can come back and retest 90, right? It can even wick down. But if this is truly going to reverse, you don't want to see it close, right, back in this range. If it closes below 90, ASTS is not in a good spot. Right now, it's trying to get out, right? Maybe tomorrow it retests and has a wick. As long as we close above 90, then we can start going back higher. We close below, I would cut my ASTS position. Now again, this depends on if you're playing calls, your expiration dates, or if you're in equity, so on and so forth. If you're in equity, you're perfectly fine. ASTS is a great company. This company is going to do really well long term. You have nothing to worry about. If you're in short dated calls, this is your level. If you're trying to accumulate leaps, see what happens, and if we come back into this level, and then maybe pick like the midpoint, which is right around realistically where this wick happened, and you can slowly start loading up in there. But it's always about key levels of buyers and sellers, right? Like, it's an auction, so you want to see who's winning the auction, and then if they can defend their auction price. Buyers are stepping in, auction price. If they defend it, we go higher. That's all trading is. I can not have a single indicator on my screen, and I could trade successfully. Because you don't need them. Any other questions? Also throw in tickers in the chat. I'll go through a couple more. Google. You guys keep picking stocks I'm in as well. Okay, so Google. I'm doing the DCA strategy. I think Google is a great company. So I DCA'd here. I actually DCA'd again today when we did the gap fill, and I'm holding my last DCA to see what Google does from this point in time. Let's draw some levels. Say that. Like that, right? So I just eyeballed some quick levels. Here I'm not even looking at the put walls, call walls, any of that. So obviously we're in a downtrend, right? Self-explanatory. Draw like a downtrend. Trend line. Downtrend is commencing. Gap filled. Probably not a bad zone for Google to have at least some sort of bounce. We want to see longer consolidation for a move up. What can happen here? Maybe a bounce, retest the trend line lower, maybe a bounce, break the trend line higher. If you're trying to play guaranteed Google calls, right, where you just don't want to worry about what it's doing, get out of this white box. get back above 368, let's say 370, get a weekly close up here. After that, buy 2 months out, do nothing, you'll be back at all-time highs. Until then, right, sellers are in control and we can go lower. If you're trying to DCA into Google because you think it's a good company, like I'm trying to do for longer term holdings, then just buy a certain percentage on each white line. So I bought, like I said, I bought some when it went here. I bought some today. I'll buy more if it goes lower. It's probably one of the best, well, I think it is the best Mag 7 company for sure. And generally speaking, it's one of the best AI companies out there because they have so much to them, right? They have their robots that they're working on. They have self-driving cars. They still have Google as a search engine. They have Gemini. They have all the partnerships. They have their data centers. Like the list just goes on and on and on. So Google is never a bad buy, and I just keep buying as it keeps going lower. Hope that answered your question, Kofi. There's no real like levels here aside from this box, so I know you're smart enough. If you're in leaps, scale into your leaps. If you're in equity, scale into your equity. If you're in short-term calls, I wouldn't do it. On this, okay. Hey, another one that I'm in. So on this is one I was wrong about. I have this orange line. I sincerely thought that once we broke above, we're gonna test it here, and we're just gonna keep going higher, right? Come back down, test, higher. That didn't happen. And that's why stop losses are important, right? So daily closes, levels, and stop losses. So I had on this here, came up here, I was still holding on this, came back down here, I bought more on this, sold my on this right here. Had to follow my own strategy. Okay, why did I sell here? Daily close, buyers couldn't hold it, broke below this level, invalidated. In the end, my average was probably somewhere here-ish, so I did take a small loss. Now we're back down to another key level. Right? Going back to the max fear thing. Every time it touches 9, great place to buy. I'd be buying on this here. If you have money and you're not in on this and you're not part of this flush, this is a really good time to be accumulating. The company itself is really good. They have a crazy amount of partnerships. The CEO is awesome, super chill dude. The reason that they flushed is because one, they keep fucking diluting, and two, he had to pay taxes, and so he sold some shares. But the thesis of the company is still intact, and it's a good long-term buy. So I would buy on this here, and you have a little range that you can see, right? Let's say something like this. That's your stop loss pillow. So it can come back down here, maybe leave a couple wicks. As long as we don't get a weekly close, because this is now a weekly level, below here, you're good. And I don't think it's going to happen with Ondas. I think it's probably just going to start chopping around and maybe just be shitty for a couple weeks. But long term, it's a good company. So, good place to buy, nothing short term though. KR, what is that? Kraken Robotics. Is this the one, Benny? KRKNF. Yes. Okay. Let's take a look at this. That's it. Okay. So here's our downward trend line. Let's draw some levels. We have a level up here. level down here. Okay, so keeping it simple, right? We're in a level where buyers are interested, right? If you're a long-term believer in this company, you're going to want to be buying in this range, right? So while it's here, you're either accumulating because you're a long-term believer or you're doing nothing, right? First level of resistance is 728. Next level is this downward trend line. How do stocks usually move with all of this? Is they take their time, right? Might come down, look very bearish, get that bounce, come up, consolidate, break here, right? People get bullish, but then you have the downward trend line, hit this, come back down, consolidate, and then breaks both. When it breaks both, that's your sign. Okay, we're good. I believe this is going back to all-time highs. I'm a long-term holder because I don't even know if this is, yeah, most exchanges won't even have this. So you're going to want to be a long-term holder. I doubt you're going to be playing options on this. Breaks above it. Solid risk to reward ratio, right? That's how I see this moving, Benny, is just chopping in here for a while, getting both sides faked out, eventually breaking out, and then that would be when you would want to just buy, load up, and hold for it to come back to all-time highs. Make surface and subsurface uncrewed vessels. Interesting, okay. So like submarines? Cool. We have AI submarines now. Guess we're all gonna die faster than expected. Yeah, I can hear you. Mm-hmm. Got it. Okay, cool. Yes, sir. I was wondering, I should probably let's do an SPY analysis for potentially where we could go, because I think you guys will be interested in that. So I'll do this with literally zero additional data aside from a blank chart, and I'll throw in the fib, because I do think fibs can sometimes be useful. Okay, so here's our SPY chart, right? Layer the Fibonacci chart over it. Short term, right? Let's say, so one, everything is about, again, levels, buyers, sellers. The 0.786 level, 732, right here, where I also drew a white line. This is your first level to break if you want to actually go bullish. Now this is with current structure. Obviously if we go lower, that's going to change. But let's say tomorrow we get a massive bull candle and we get above 732, right? With that, you're also probably going to see VIX drop. So if that was to happen, you'd see like a bearish engulfing candle on VIX, and that becomes your level to hold, right? As long as we then stay above 732 on the daily, doesn't matter if we wick down, then SPY can start reversing higher. Currently, we're kind of in no man's land, okay? I have my next level as 720. I think it probably correlates with a put wall. I drew the level because it is a big round number. It is a put wall. Okay, cool. So I kind of guessed that. But yeah, that is also a put wall. So and that would be the next level to watch for a bounce, right? And that also means that because it is a put wall and because we are looking bearish, there's a high probability we may flush down here. That's why I have an alert. Uh, Personally, I'll be selling some cash secured puts if we get down to 720 because I think people are going to get very bearish. And it may be a level where we reverse it. So currently, bearish structure, unless we get above 732, don't be bullish. More likely we get down to 720. Then from 720, we see what happens, right? We get to 720, this is still the range. I would still want to see above 732 to be bullish. If we break below 720, and this would be on a weekly close, right? Not a daily. In this case, I want to see a weekly, because then that would invalidate the put wall. We would go to the 0.618 fib level, which is 710, which you can also see was a popular level, right? So the fib levels perfectly line up with the levels of interest, 710. And realistically, I'm just going to call it, and I could be wrong, I don't think we go lower than 710. I think the worst case scenario you get is SPY goes down here. Now, if I throw some indicators on the chart, let's say we throw the simple moving averages. You have your 50 daily sitting at 720. So another reason for us to touch 720. So I just want you guys to be prepared for this. Like the confluence is lining up for more red. So, just be ready for more red in your portfolios. But that also gives us a more likelihood of bouncing here, right? We have a put wall. We have the daily 50. If you're a futures trader or a day scalper, this would be the level you'd want to long and get some sort of pop because you're going to get it. And then you take profits. It comes down here, buy, get your pop. Whatever happens after, you don't care because you're, short term. And then you can make money like that. We break below 720, we go to 710. That would be my next level. Where is the 20? Okay, this is still at 700. Interesting. 710's here. If we chop around for 2-3 weeks, this would move up. Yeah, I still think probably around 710 would be a likely bottom for SPY. 710 and 705. So you guys have your levels. Now breaks this, comes down here, and then anything in here, I would start loading leaps. Anything in here? If we do come down here, just load up on leaps and do nothing for a year and you'll make money. So there you go. Any other questions, guys? We've been going for a while. I would see. Okay, so with the SpaceX IPO, none of us have any clue what's going to happen tomorrow, right? Going back to what I was saying, we are holding above 90 for now. I would buy a small position just so you don't feel FOMO. Like if for some reason this thing decides to just absolutely fucking jump tomorrow, so you're not feeling FOMO, you have a small position. Otherwise, I would watch this as the key level. You don't want to see it break down below 90 again. You want to see it hold. If this holds, then it's good. And you do have plenty of time, so you're not gonna, regardless of what happens here, like it's such a tight stop that you wouldn't lose a lot of money. So I'd get a small position now, assuming this holds. If it doesn't, you take a small loss and then you keep monitoring this. And when you get a proper break and hold above 90, then you can play your longer term positions here for ASTS. Alright, last one I'll do now for you, LBZ. Now, let's see. Goodbye zone. That's all I'm gonna say for this one. I like this level. I would not want to see a weekly close below. So if you're buying here, and this is going to be a larger stop, but let's say we're buying here, no weekly close below 95, and from there make sure it's a longer term hold. I have no clue how this is going to move, but assuming this holds, it's going to get somewhere back up here, and then you can sell. I just don't think it's worth it. I don't think any of these software companies are really worth it. Like, they got their pop, and realistically, you're probably just going to see a massive range on them, and they're going to do fucking nothing and just do this for a while. So I just don't think it's worth it. Nope, you should never do that because you can never time the market. The one thing I do expect from all of this short term is I do think we tap down towards 720. Just because there's so much confluence at the level, I think it would be a nice flush to like really freak people out. Just because we touch 720 doesn't mean we're guaranteed 710. Right? It's one of the reasons why you should never touch your long-term investments is because you can't predict the market. I'll give you a personal example before I end this. I sold my 401k somewhere here. I bought my 401k, or I wanted to buy my 401k here. I actually forgot the day of. Bought it the next day. The fucking 401k takes like 3 days to register with my shitty company. Ended up buying my 401k up here. So after that, I was like, okay, I'm never touching my long-term shit again. Alright, guys, I have this recorded. I'm gonna leave you all with that.